BEL, HAL, and Solar Industries, decoding the 10 lakh crore order pipeline ahead of budget 2026. With 1.8 lakh crore allocated in FY25, over 50% already utilized in H1, and 19 lakh crore of orders and approvals lined up, defense investing is now about execution, not visibility. A concise analysis of the Rs10 Lakh Crore order pipeline involving BEL, HAL, and Solar Industries ahead of budget 2026. Explore defense, energy, and manufacturing order prospects, government spending expectations, strategic implications, and market impact. The Indian defense sector has been on a strong run, buoyed by a robust budgetary outlay of 1.8 lakh crore in budget 2025. Beyond the substantial budget, utilization has also remained robust, with over 50% utilized in the H1 FY26, as per Nuvama Institutional Equities. This provides strong revenue visibility. The Revenue Visibility Roadmap, H1 FY26 Utilization Update. Beyond the immediate fiscal budget, the sector is supported by a large accumulation of approvals. Over the past 36 months, approximately 9 lakh crore in acceptances of necessity have been approved. Also, the pipeline for defense public sector undertakings is estimated at 10 lakh crore, thereby ensuring strong order visibility. Not only this, given the macroeconomic instability that is reshaping the global arms race, India is expected to hike its defense budget by 10 to 15% in budget 2026. This is likely to take the defense budget to around 8 lakh crore. Defense spending has transitioned from discretionary to essential, as India's defense budget still hovers around 1.9% of GDP, below the recommended 3%. This article focuses on 3 companies that remain well positioned to deliver amid rising defense outlays. Valuations, which have been derated post recent correction, also make this an opportune time to relook at these names. Let us take a look. 1. Bharat Electronics, the systems integrator with a 1 lakh crore pipeline. Bharat Electronics BEL is a state-owned enterprise under the Ministry of Defence and designs and manufactures advanced electronic equipment for the Indian Armed Forces. The company is a key player in missile systems, radars and surveillance, electronic warfare, naval systems, and avionics. A 1 lakh crore roadmap. As of October 31, 2025, BEL's order book stood at about 7,600 crore, providing revenue visibility of about 3 years, based on trailing 12-month TTM revenue of 25152 crore. The top orders currently held include LRSAM 5000 crore, electronic fuses for 500 crore, BMP-2 upgrade 3000 crore, and Akash systems 700 crore. BEL has a project pipeline exceeding 1 lakh crore over the next 18 to 24 months. It is expected to benefit from the modernization and localization drive, growing at 2 to 3 times the rate of the defense budget, Nuvama states. BEL consistently beats margin estimates, with guidance of an operating profit margin of 27% plus. It has demonstrated execution capabilities with a 90 to 95% on-time delivery confidence. The 30,000 crore CRSAM catalyst. A key trigger is the potential 30,000 crore order for the CRSAM Quick Reaction Surface-to-Air Missile System. The company is fully confident of receiving the CRSAM order by March 2026. This program will involve a first-of-production model FOPM realization phase lasting 12 to 18 months. Revenue recognition is likely to begin in the financial year following FOPM clearance. The total execution timeline is estimated at 5 to 6 years. Beyond CRSAM, BEL expects orders for the next-generation Corvette subsystems for 500 crore this fiscal, avionics packages for 97 LCA Mark 1A aircraft to 500 crore, and various emergency procurement orders. BEL is currently a development partner for radars and control centers under Project Kisha Sudarshan Chakra. A production order is expected by December 2029, following prototype development and trials. To capitalize on the strong budget pipeline and deliver orders on time, BEL has pledged to invest at least 400 crore over the next 3 to 4 years. The budget will be used to set up a defense system integration complex in Andhra Pradesh. This 920-acre facility will focus on the integration, testing, and qualification of complex missile systems, such as CRSAM. BEL has formed a consortium with L&T to bid for the Advanced Medium Combat Aircraft AMCA program. The strategic goal is to move beyond supplying electronic modules to becoming a system integrator for airborne platforms. 2. Hindustan Aeronautics, navigating the GE engine supply chain bottleneck. Hindustan Aeronautics HAL manufactures aircraft and helicopters, and also provides repair and maintenance services. It is currently in transition. While it holds an unprecedented order book, its ability to translate these orders into revenue is currently constrained by supply chain bottlenecks. The 2.3 lakh crore order book. HAL holds a backlog of about 2.3 lakh crore, providing revenue visibility of about 7 times TTM revenue. Beyond this backlog, there is a staggering pipeline of over 4 lakh crore expected to materialize over the next decade. However, subdued execution is expected to persist for the next 2 to 3 years. Navigating a 7x revenue backlog amid global supply constraints. HAL has received only 5 GE engines so far. This delay in the delivery of GE 404 engines for the LCA Tejas Mk1A fighter jets is expected to affect the execution of the order book. While the commitment was for 8 to 10 units, HAL is estimated to deliver only 3 units in FY26, contributing roughly 5% to the top line. Thus, the delivery schedule for the LCA Tejas is a critical monitorable for HAL's near-term performance. The 4 lakh crore long-term pipeline for AMCA and IMRH. Execution risks are not limited to Tejas alone. Other platforms, such as the ALH Dhruv, Dornier, and HTT-40, are also facing delays due to global supply chain issues and domestic regulatory hurdles. Despite near-term hurdles, HAL remains the primary integrator for Indian military aviation. The 4 lakh crore pipeline includes several major indigenous platforms. On the helicopter side, the Indian multi-role helicopter IMRH alone represents a potential outlay of 9,200 crore around FY 28-29, complemented by 6,700 crore for light combat helicopters and 2,600 crore for light utility helicopters spread over 10 years. In combat aircraft, capital intensity rises further, with the AMCA program estimated at 1.1 trillion by FY 34-35, the LCA Mark II at 96,000 crore by FY 29-30, and 14,000 crore earmarked for the twin-engine deck-based fighter. Higher competition risks also persist. Private players have formed consortia to bid for upcoming projects, potentially diluting HAL's incumbency. Consortia involving L&T, Bharat Forge, and Adani Defence are participating in the bid process for the AMCA program. HAL is working to localize critical components through partnerships with companies like Midhani and PTC Industries. 3. Solar Industries, the pivot from industrial explosives to high-tech munitions. Solar Industries is one of the largest domestic manufacturers of bulk and cartridge explosives, detonators, detonating cord, and components. It has about 24% market share in the explosives sector. Its Nagpur plant is the world's largest single-location cartridge plant. Aiming for 50% revenue contribution by FY28. Solar is viewed as a structurally high-growth company that is currently undergoing a massive pivot. Historically known for industrial explosives, it is rapidly scaling into a major defense player. Defense revenue exceeded 900 crores for the first half of FY26, accounting for 22% of revenue. Solar aims to scale its defense revenue share from 30% FY26 to 50% by FY28. Exports act as a second major pillar of growth, driven by global ammunition shortages and the company's expansion into new markets. Solar is setting up operations in Australia and Kazakhstan and plans to enter Saudi Arabia. It targets 15% annualized growth in its international business geographies. The company holds a defense order book of approximately 1,500 crores, providing revenue visibility of around 2 years, based on a TTM of 8,376 crore. Scaling Pinaka rocket production and 155mm shell trials. Approximately 6,000 crore of the order book is attributed to Pinaka rockets. Commercial sales for Pinaka rockets are scheduled to begin in the third quarter. The company expects significant growth from this vertical starting in Q3. Additionally, it has participated in the guided Pinaka rocket program and anticipates receiving commercial orders within 1 to 2 quarters. The company has commenced trial production of 155mm shells and will supply them for technical qualification. Commercial production is expected to begin in Q4, with the strategic aim of manufacturing the full round of 155mm ammunition. Also, Solar has supplied Nagastra loitering munitions, which were used in recent conflicts, and has received repeat orders. The export frontier, capitalizing on global ammunition shortages. Bhargavastra counter-drone is currently in development, with initial trials proving successful. The company aims to complete field trials by March 2026. It is developing a solution that includes both hard kill and soft kill capabilities. In addition, the company has received orders for energetic materials and is capitalizing on the global ammunition shortage. The execution credibility test. All three companies boast strong return ratios, return on capital employed ROCE, and return on equity ROE. This reflects their strong profitability over the past few years, as defense has become a structural long-term theme. BEL's valuation is now below its historical multiple and in line with the industry. Solar Industries is currently trading at a premium to both standalone multiples and the industry median. HAL is trading at a multiple in line with historical levels and below the industry median. That said, order backlogs now equivalent to 3 to 5 times their annual revenues, the primary C.